So this is how you can get an exceptional risk reward on a trade. And I know a lot of people look for risk reward and they have metrics and they say, oh, I want a 3-to-1 risk reward, something like that. Risk reward can't be defined before you take a trade on. You look at the trade and you say, right, that's where my stop is. That's where my target is. Therefore, my risk reward is X. That's how you have to think about it. But the potential of what a trade can be gives you the ability to increase risk. It then allows you to look at a trade and say, okay, I perhaps got a 10 tick risk on this trade. And you might look at that and say to yourself, okay, I'd only want to risk 2 contracts, so $200, for example. But because of the potential payout on that, the scope of the move, the potential of the trade, it can be worth taking extra risk, because if the trade works, you're not just getting the normal payout that you might get from that setup. You've now got edge, because now you've got a situation that a relatively small risk, simplistic trade turns into a much, much bigger move. This is how you can take very short-term day trading skills and extend them into a swing trader's mindset. This makes anybody more effective. As a day trader, it makes you more effective at spotting those bigger potential moves. As a swing trader, it makes you more accurate at getting into your trades. So it's about broadening horizons. The mistake that most day traders make is they become very narrow focused. It's setup, 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 setup. And as they do that, what they miss is the potential of certain setups. And that's where you get the greatest edge, that certain setups have so much more to give you than other setups. So let's go and have a little look at this. This is an example of one in the euro. So for those who like trading FX, euro dollar is the main market that most people will trade. Euro dollar on the Fed yesterday was a huge move, and for a very obvious reason. Again, the potential that the euro had yesterday on the Fed was great. And that was why you got that bigger move in the euro than almost anything else. So this is all about, when is a flag more than a flag? So this is what I mean by potential edge. What you've got here is a simple flag. Now, if we look at a flag, there's your simple flagpole. So if you draw the flagpole as from the low to the recent high, the idea of a simple technical trade here is you measure the height of the pole, and when the flag breaks, i.e. you break the trend, then you get the same distance. That's your measured move. So in this instance, you have got a flagpole of 122 ticks. If the flag breaks, that gives you a target of 102.29. The flag break comes at 101.07. The problem that you've got here is it's not a very easily defined stop, and potentially a stop that you don't really want to take. Arguably, if you play the break of the flag, your stop's got to be down here at 75. That's around about a 30 tick stop in the euro dollar. Maybe an uncomfortable trade. Some people will look at this and then dismiss the trade. And I can understand that. Yes, it's a reasonable risk reward. It's probably about 3-to-1. But if the trade goes wrong, you're losing 40 ticks on it nearly. So you can look at this and say, okay, I maybe don't like that. But the potential of what this offers you is enormous. And that's where the value comes. And that's where your edge is. Because now you can take on that risk with conviction because of the potential of what the trade offers you. This is all about understanding what's going to happen when that flag breaks. It's not just about the flag break and the 120 tick target. It's about the flag break that then breaks a daily head and shoulders. There's your shoulder, head, shoulder. Now, it is a messy head and shoulders, don't get me wrong, but that's part of the skill of technical analysis. It's a skill, it's not a science. So here you've got a situation where what you're able to say is, on that flag break, I'm breaking the recent high, the previous recent high as well, and a daily head and shoulders on the back of one of the biggest drops over the course of 9 months that you've seen in the euro. So you're basically saying, I found the big time bottom. This now gives you so much more. So this is where your edge comes on the trade. That 30, 40 tick risk that you might be taking is much more acceptable when your payout is not 120 ticks, but your payout could be the measured target on the head and shoulders of 600, 700, 800 ticks. You can see this range at least from a daily to trade through. So even on a very simplistic terms, you break the head and shoulders, get into this range, that's where your initial target would be and you're getting out. where the purple arrow goes, but you've got all that. You've got another 200 ticks from there. So this is how you can turn a day trade into a swing trade. And it's all about understanding the potential that one setup has. And you do this on shorter time frames. So for those who like day trading, you can take 5-minute charts, 5-minute setups, play into hourly breakouts. Then you've got a much, much bigger move. So it's not the setup that gives you the edge, the probability of flags working or the risk reward of the flag. It's the potential. It's what the flag break leads to. And that flag break creates an enormous risk reward on the trade, because you've now gone to a point where you're risking 40 ticks for 400, 500, 600 ticks. So now you're on a much, much better looking trade. And that's what it's all about. It's that broadening your horizons. That potential edge is so important. If you can give yourself that on a trade, you're much more comfortable to take risk. You're much more able to dismiss small and minor flags and take those flags that basically the little trade gives you so much more of a potential move. And there you go. That's what you get over the next few days. The flag break itself is enough just on the day to give you the 120 plus ticks. If you're a short time frame trader, but if you're taking that trade on, even if you're a day trader, you don't have to hold this for the entire move, but your bias is very easy now. Within the next day, you get a second trend. You could be looking for that. You'd be playing for that all of the next day as well. So it's not just the fact that the breakout gives you a trade. The breakout tells you what to be doing for the coming days and weeks ahead. It's all about broadening horizons. That's what improves trades. That's another way that you can gain edge. And this is the final continuation. Yes, it takes some time. This crosses you over the rollover, but you do get the full move all the way up to 110. So that's coming from 102 to 110. It's an 800 tick move. That's the scope of the potential of this trade.